Ever scrolled through endless bank options, each with seemingly indistinguishable logos and promises? Traditional banks can feel, well, traditional. But what if you crave a more streamlined, tech-savvy banking experience? Enter Tangerine, a Canadian direct bank known for its innovative approach and customer focus. But before you dive into their world of high-interest savings accounts and mobile app magic, a question might linger: who exactly is behind the wheel? Tangerine's story starts in 1997, way before the age of smartphones and constant connectivity. Back then, it was known as ING Direct, a subsidiary of the Dutch banking giant ING Group. ING Direct was a pioneer in the concept of a direct bank, one that ditched the fancy brick-and-mortar branches and focused on a completely digital experience. This meant lower overhead costs, which they generously translated into attractive interest rates for their customers. Fast forward to 2012, and the Canadian banking landscape undergoes a shift. Scotiabank, one of Canada's Big Five banks, sets its sights on ING Direct. Recognizing the potential of a strong digital presence in an increasingly tech-driven world, Scotiabank acquired ING Direct. Now, here's where things get interesting. Scotiabank doesn't simply absorb ING Direct. They understand the unique value proposition and loyal customer base ING Direct has cultivated. A rebranding happens in 2014, and ING Direct is reborn as Tangerine, a name that retains the brand's signature orange color while reflecting a fresh, dynamic approach. So, to answer the burning question, who owns Tangerine Bank? The official answer is Scotiabank. Tangerine operates as a wholly owned subsidiary, which means Scotiabank is the ultimate parent company. However, the story doesn't end there. Here's the twist: Tangerine retains a significant degree of autonomy. They have their own president and CEO, Gillian Riley, who has been instrumental in propelling Tangerine to new heights. They maintain a separate legal entity with a distinct brand identity. This allows them to stay true to their core values: simplicity, transparency, and a focus on putting the customer first. Think of it this way: Scotiabank provides the financial muscle and security of a major bank, while Tangerine gets to be the nimble, innovative player. It's a win-win situation, allowing Tangerine to continue disrupting the traditional banking scene with its unique approach. Now, this ownership structure might make you wonder: is my money safe with Tangerine? Absolutely. Here's why. Even though Tangerine is a subsidiary, it's a CDIC member in its own right. CDIC, or the Canadian Deposit Insurance Corporation, protects your eligible deposits up to $100,000 per category. This means even if something unforeseen were to happen with Tangerine, your hard-earned cash is insured. So, there you have it. The intriguing story behind who owns Tangerine Bank. It's a tale of innovation, strategic acquisition, and a commitment to providing a different kind of banking experience. With that said, thanks for watching, and until next time.